Breaking right now. Frank26 has confirmed that the contract rate has been secretly raised again, and this revelation is reverberating through the Iraqi financial community and beyond. According to insiders familiar with internal memos and banking terminal activity, exchange desks are now showing updated figures that were not publicly announced. These shadow rate adjustments appear to be tied to a series of high-level budgetary and legislative maneuvers moving behind closed doors. This is real intelligence, not rumor, but the exact scale and permanence of the new contract rate remains speculative and subject to confirmation. Frank26's voice has echoed across the Dinar forums as a crucial insider conduit. Earlier this year, he made clear that the critical hinge for any formal exchange move would be the passage of Article 122C and the alignment of the 2025 federal budget schedules. He has emphasized repeatedly that when those pieces fall into place, the contract rate will shift, and we now appear to be seeing that unfold quietly and deliberately. Multiple community reports describe rate terminals fluctuating in real time between previously expected levels and a newly elevated contract figure. That activity, if accurate, suggests banks are engaged in testing and internal activation of an updated contractual framework for IQD conversion. What's confirmed is a cycle of preparatory reform underway across Iraq's financial architecture. In January and February, announcements from the Securities Commission and the Central Bank of Iraq documented growing confidence in market performance, expansion of joint stock listings, and closer cooperation with international institutions for stability and transparency. Those reforms are now bound into budget discussions and statutory articles like 122C. Frank26 cited that contract rate changes must align with the hybrid monetary reform plan, with contract adjustments activated when Article 122C is ratified and budget tables published. That would trigger system-wide changes like salary retroactive payment mechanisms, clearinghouses, and real effective exchange rate mechanisms. We must remain cautious. Frank26 and allied sources stress that no official public announcement has accompanied today's contract rate activation. There is no formal statement from the Central Bank of Iraq or cabinet communique mentioning a new contractual exchange rate. What is visible are circuit signals. Banks testing internal systems, memos leaked among redemption centers, traders noting momentary shifts in live portal quotes. That is how the secret rate appears to have gone live quietly. Yet, without legislative confirmation or public documentation, this remains sensitive intelligence, not a bank-published fact. If in fact a higher contract rate has been activated, the implications are significant. For employees paid in IQD under state contracts, a retroactive adjustment tied to Article 122C could deliver substantial currency value changes reaching back through months of government payroll. For international holders, hidden contract rates may influence redemption centers quietly honoring higher internal pricing. But again, absent transparency, the risks of misinterpretation, inaccurate speculation, or premature trades are high. In recent months, Frank26 has emphasized the need to watch legislative progress and IMF engagement. Community coverage reported that the Iraqi Finance Ministry and Central Bank have engaged in multiple meetings with the U.S. Treasury and Federal Reserve, aligning financial reform to global standards. That coordination is meant to shore up confidence ahead of monetary shifts. Meanwhile, exchange houses have received new compliance training, and internal foreign currency protocols have tightened dramatically. Those steps feed the framework that permits a hidden contract rate activation to occur safely, yet still without official exposure. What community members are doing now is capturing terminal screen dumps, recording withdrawal redemption quotes live at cash pickup centers, and corroborating timing of budget milestones with rate behavior. That is essential groundwork given that Frank26's claim of a secret raise is based on tracked internal activity. Analysts warn anyone considering making moves based on this to avoid unregulated dealers or speculative postings promising instant gains. The history of previous false alarms and unsubstantiated rumors remains cautionary. In conclusion, Frank26's confirmation that the contract rate has been secretly raised again stands on credible community intelligence. Internal bank tests, leaked terminal quotes, and alignment with structural reforms tied to Article 122C and the 2025 budget. Yet no official public confirmation exists. The rate activation remains behind a veil, and until legal frameworks are public and central authorities confirm, everything must be considered plausible but not guaranteed. Currency holders and policymakers watching this moment should stay alert to official signals, treaty-level confirmation, non-rumor rate memos, and documented redemption center pricing. The coming days may reveal whether this secret raise becomes the groundwork for an eventual official rate release, or remains an internal anomaly. We will continue monitoring for any public disclosures or legal enact.